Thank you for joining me. I'm Alex, and I want to talk about Citigroup because they just reported earnings, and by just I mean last week, and Yahoo Finance is really slow, so they just put up the numbers today or yesterday. So their year ends at the end of the year. Ironic, I know. And so does Morgan Stanley, which I covered yesterday, and Goldman Sachs, which I'll probably cover tomorrow. And what they do is banking, and Citigroup is actually pretty big international, which means that they're actually fairly well known in Germany, and all the other banks are really not. So good plus there, because obviously being diversified has its advantages. So current price is $80.10, which gives them a market cap of $169 billion. Dividend yield is currently 2.55% with a 24% payout ratio, which is amazing because they could actually have over 10% dividend without losing money. Always an amazing thing. Revenue is $74 billion, earnings $19.4 billion, which gives them PE of just under 10 and a forward PE of just over 8.5, which is amazing. Total assets $1.95 trillion, total liabilities $1.76 trillion, which gives them total stockholders' equity of $195 billion, which is remarkable for several different reasons. One being that their stockholders' equity is actually higher than their market cap, which is amazing. And you don't often see that these days, where the stock are overvalued and everything is in a bubble, and clearly we're going towards a recession. So stockholders' equity being higher than the market cap, which apparently it's been for a while because there's quite the significant difference there. So to sum that all up, for a dividend investor, this is number one, a very safe stock. Number two, a fairly decent dividend yield and a great payout ratio. And number three, the balance sheet is just amazing, obviously, and so is the PE. So I would say that for a dividend investor and not a dividend growth investor, this is actually an amazing stock. And for a value investor, you cannot really ignore stocks where the stockholders' equity is higher than the market cap. That just doesn't happen a lot. And as an added bonus to that, you get a PE of 10, you get a dividend yield of 2.5%, and you get growth. Growth? You get some growth anyway. So obviously more in the earnings than the revenue, but still quite a remarkable thing there. So I would say that this is a very safe stock, and I really wouldn't mind having a fairly big position in this. And I'm probably going to buy some shares and sell some other stuff that I have that I'm not currently very sure about. So I think I'm going to sell some retail and buy some Citigroup. Anyway, that's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.